Investors and traders, welcome to the channel Market Chart Pattern. Today is 13th of February 2024. I hope everyone is having a great day. In this video segment, we are going to take a look at the key US markets, including the bond market, the US dollar. We'll take a look at select few currencies, gold, and then we'll dig deep into the US stock indices. As always, this video is for educational purposes only and it is not a financial advice. Alright, so what a day it has been in the stock market. We have seen some declines coming in the stock market, so we'll take a deeper look at those. Certain key levels we'll be watching per our standard deviation models and what the price action is doing. But before that, let's go and move into the bond market. So we'll start by taking a look at the US Treasury bond futures. This is the chart for the long bond futures, the weekly chart. One of the key areas we were watching for was 118.29. That has been broken to the downside, so we'll just move to the daily chart, and here we go. So this is what the daily chart looks like, and what we can see is whenever this trend line was broken down, we started to look at maybe this 118.28 will be actually revisited. But what has actually transpired today is it has broken below this. So we'll actually evaluate what are the next key levels that we should be watching. One of the key things that I wanted to point out is again this concept of the symmetry. So going back to the weekly chart, so whenever we have seen the market actually rally about this much, we have seen a sell-off come in. This one is a little bit different because in this the market did go up for a couple of weeks and it was not able to rally any higher, and now for the last couple of months we are seeing this market pull back right into this 20-week moving average. So on the daily chart, a few key levels that we want to watch is number one is that we'll be watching our favorite one-to-one price projection, which is ABCD. So if we just take this, copy this, and project it from this point. So if this is our point A, this is point B, this is point C, so we project AB from point C, and we get a little bit lower around 117 and 19 seconds. And in terms of the retracement, just putting out these retracements here, so it will be between the 38.2% and 50% retracement. So we are pretty close to 117 and 16 seconds, and it could go a little bit lower as well. And of course, the 61.8% Fibonacci retracement goes as low as 114 and 17 seconds. Not entirely sure whether we'll get to this point, but 117, 117.19 followed by 116.23. Looks like with this kind of bearish move, the market actually might be moving there. Another thing that I'll look at is the expansion of this move, and I'll just draw 1.618 and 1.272. Remove this to make it a little bit clear. So yeah, 1.272 and ABCD price projection comes around 117.17. So that's the region we'll be watching for. And it's also entirely possible that the move that we have seen here, look, this has been a sustained rally from October 2023. That it's just a first ABCD one-to-one price projection retracement in a new bull market. That's also possible, although we have seen the bonds have been in a really big bear market for pretty much since March of 2020. So watching this level, and with this much selling in the bond market, of course the risky assets are also impacted, and we have seen a decline in the stock markets as well, which we'll discuss more. Really quick look at the US 10-year Treasury note futures. This is daily chart, a similar kind of picture here, and we'll draw our ABCD price pattern here. So take this, copy this, and what we can see is, in fact, wow. So today the treasury note has actually broken more than the 30-year long bond futures. So that's very interesting. And from a retracement perspective, I think it's already at the 50%. 50% is a little bit lower, and the 61.8% is 108.12. Looking at this, perhaps it's possible that the 30-year bond futures could actually sell a little bit more further down to its 50% retracement as well. And if we just take the expansion of this BC swing, here we go, and 1.618, yeah, so the 1.618 comes around 109 and 11 seconds. So here what we are looking at is 109.11. I think this is where the market would find some decent support, and also the 30-year is also nearing its ABCD pattern projection as well. All right, so with that, let's take a look at the US dollar. Wow, so this is the daily chart of US dollar, and you guys know that our subscribers, long-term subscribers watching the videos, know that we had been talking about 104.25 level for quite a while, because this market had been in a trading range, and then but it was still holding the bottom of this range and around the 38.2% retracement as well. And because of that, we were actually looking at the dollar from a bullish point of view. And what we have seen is it's just a skyrocket. We had the CPI data come in today, and the CPI was a little bit hotter than what was expected, and we have seen a rocket ship here. So in terms of retracements, I'm going to draw some retracements now, and let's see where we are in this. So it has gone above the 61.8% retracement, although it's just only one day, but it's a really strong move. And the chances are it is going for the 78.6% retracement around 105.60 as its next mark. So it's gonna go and retrace pretty much all of this move here, and look at this really bearish candle, and now we are in the reverse mode, so it's gonna go and balance it out. Taking a look at the Euro USD, and this is an inverse, pretty much a mirror image of the dollar index, because I believe about 51% is euro in the index, and we were looking for the 61.8% retracement. We have got that. So watching price action, but looks like it is also heading a little bit lower, perhaps to its 78.6% retracement as well. Yeah, which comes further down around 106. Then the other one is the Japanese yen. So this is the daily chart, and again here really strong, and looks like it's gonna go and challenge these highs, and maybe even it's able to take these highs out. So if you look at all of this, this has been a double top formation around here, so a top and a top, and then a top and a micro top around here as well. So double top formation. It retraced all the way down to the 78.6% retracement of this move, and now it's gonna go and challenge these highs again. If it's able to convincingly take those highs out, and then that looks like against the Japanese yen, the US dollar could be moving much higher. One thing that I would like to point out is this channel. While it is moving there, it'll just there is some resistance coming in from this channel line as well, so something we'll watch, but this move has been pretty strong. Now let's take a look at gold market. Here we go. So oh wow, so the gold market, it's very interesting, because with the dollar being that strong, the gold had been holding really well until today. And what we have seen is a pretty big move, and this what what we had drawn as a support, because we were looking for perhaps this market could rally a little bit higher up to about 2115 level, but looks like it's going back right to 1988, and possibly even coming down to around 1938, this level as well, because it could be a bigger ABCD, like this. Here we go. So that's a certainly a possibility. With the dollar being this strong, that's gonna have some consequences on some other assets like gold, for example. But that would be a pretty 1938, 1940 will be a pretty important spot to take a look at, because we'll also have structural support coming from here. Now we'll go and take a look at the stock indices. Before that, let's take a quick look at crude oil. So here we go. So if you guys remember, we have been bullish the crude oil market. We were looking for this ABCD price projection, and the market reached that, and after that, pretty strong sell-off right into this channel support, and now it's just going to go and challenge these highs. In fact, what we are looking at is roughly around 79, 75, $80 a barrel crude oil in the next few days, maybe by the end of the week. It's also possible, and it's possible that what we might see is actually a uh, a one-to-one price projection pattern taking place like this. Here we go, and if we just take the expansion levels and 1.272, so the ABCD and 1.272, they form a confluence level here with this one, and then if we are looking at the bigger one, so this is gonna be the bigger one. Here we go, and we take this. Then the bigger one forms a confluence, not exactly, but pretty close, with 1.6 minute expansion. So what we're looking for is crude oil probably going anywhere between 81.35 to 84 dollars per barrel. That's the that looks where the crude oil might actually be heading. And if we just take the retracement, and here we go, this is the 50%. Yeah, so we'll have a confluence of number of things coming right at the 81.35 level. We have some structural resistance coming, and we have the 50% retracement, 1.272 expansion. Above that, around 84, 84.60, we have the 61.8% retracement. ABCD price pattern a little bit lower, so this 81.35 to 84 is gonna be, I think, the zone in which the crude is gonna go and maybe find some resistance. And if it is able to break convincingly above the 84.60, then the crude is really bullish, and we could have, in fact, these the 20th of September 2023 highs get challenged as well. That's also possibility. With that, let's take a look at the stock indices. So this is the daily chart of S&P 500. And while we are at it, let me just really quickly show you the weekly chart. And here, just want to stress this, that look at this beautiful trend line. The price is way above it. Of course, the price can pull back, but with that, let's quickly take a look at our timing model as well that we were watching for. So this is gonna be the daily chart of Dow Jones Cash, and here we have a key date coming in on 27th of February 2024. We are not there yet, but we are beginning to see some volatility come in, and it's possible with this kind of price action, um, it could be just a 1 day wonder, because it went right to the 20-day moving average, and of course there were buyers stepped in at the bottom of this range right here. So what is possible is that we could see price move higher, maybe even take these highs out, but most likely the chances are we will begin to form some sort of a trading range between now until the 27th of February, and we'll have to wait and see what transpires. So going back to the S&P 500 cash chart, what we can see is here the market today. What a I mean, from a pure price action perspective, it was just amazing because there was so much selling that came in ever since the CPI data was released, and the cash market opened with a pretty big gap. Now, what is really interesting in this is this is how much the market had declined at the beginning of from the end, so that's 28th of December till the 5th of January, and it took a few days for the market to do that. And then there were a lot of talking heads, there were a lot of things about on the YouTube, this is going to happen, that is going to happen, market is going to decline by this much. We had a fantastic rally take place. Um, and what we have done today is this is really quite amazing to watch. Is we have had this decline. In fact, this decline exceeded a little bit on an intraday basis in just one trading day. So this is something really that amazes me, that the amount of selling that came in, and but we also happen to be above our certain key levels, so such as 49.11, and what the market has done is just come back and tested that, and actually towards the bottom of this, there's a little bit of a gap which is open as well, came pretty close to that, but the important thing is the 20-day moving average is just below that, so the market actually came and touched that. On the weekly chart, we really have to see how this is gonna close. This week is going to close, because on the end of the week, um, we do have a higher level of 5188, which is the 1.272 expansion. So it'll be interesting to see if in this cycle market is able to reach that. So just throwing that out for you guys so that we keep that in at the back of our mind. With that, let's take a look at the E-mini futures for the S&P 500 market. So here again, in futures, it's a little bit clear that what the market did is actually let's try to do the same thing which we did with the cash market. So we take this, and we just clone this, and here we go. So in the yeah, it came pretty close, but not exactly, but right to the 20-day moving average. And here, what has happened is the buyers stepped in, and they begin to buy the market, and it was towards the end. Uh, the last hour, it was pretty fascinating to watch how quickly the market was actually able to move higher, and a fair amount of buying came in. So what we are looking at this screen is our S&P 500, and for the futures market standard deviation levels. So we were expecting for ES a 90-point move from last Friday's close, which is 50.44 in either direction. And what we have seen is a move down to the downside, and our -1 standard deviation comes in at 49.53, and -2 standard deviation at 48.63. So far the price has been between the -1 and -2 standard deviation, so that's quite normal in terms of the price action, because what we have nowadays is there's a lot of options activity that takes place in these markets now. And the options, you have option buyer, and then you have the professionals which are selling the options, and by selling the options, let's just sell puts, they're actually collecting premium, which is an income or revenue for them. Now, if the price begins to move lower, and they have sold the put, and then at some point the professionals might have to come in and actually protect their position. So that's where we see sometimes some sort of buy programs kick in. For example, and we see some fantastic moves to the upside. And ever since I believe since COVID days, this activity in options has really increased tremendously, and that's why it's really important to also take a look at the standard deviation levels as well. But so far, the ES between -1 and -2 standard deviation levels, and kind of the move that we had been expecting. But it did move beyond 90 points just on the weekly basis. Okay, with that, let's take a look at the NQ. Here we go. So the NQ, again, here, one of the things, let's do that. Here, we copy this and see what the price did today. And it just retraced by about the same amount that it had done. Now, the difference is that, when this pullback happened starting end of January, it took a good few days. So 1, 2, 3, 4, 5. One trading day, one trading week, excuse me. And the move was so forceful today that it had retraced that much amount in just a couple of trading days from top to bottom, right at the 20-day moving average. And let's bring our here we go. This is the standard deviation levels, and what we were watching for was what 323 point move from last Friday's close. And here the -1 standard deviation 17,716, and the -2 standard deviation 17,392. So I believe the price went between that. Let's see what was the lowest point today. 17,542. So yeah, it's between the -1 and -2 standard deviation, and it's possible that it actually go and hit -2 standard deviation around 17,392 as well. I'll put these levels in the description. You guys can have a look at these as well. So that's what happened in the NQs. Just on the weekly chart, this is longer term. One of the key areas we had been watching for was this 18,570 level, and I believe that's still possible. Maybe even by the end of this month. We'll have to wait and see how this week is going to close. But just like the S&P 500, it looks like we might be getting into an area where we could see some moves, but also maybe a trading range will begin to take place as well. So we'll have to wait and see how the week is going to close. But we do have this level not too far away for NASDAQ on the weekly chart. So it'll be interesting to see the price action for the rest of this week. Now let's take a look at the Dow Jones Industrial. This is the daily chart of the futures E-mini Dow Jones, and this is one of the indices in which we have this ABCD price pattern completed the earliest, and some of the other indices such as S&P 500 in cash, for example, they followed up, and they had been much stronger as well, especially the NASDAQ. And then, but it never really broke below this level, never really gave some sort of a sell signal, and what we have seen is a move higher, which is really good. And now it has just price pulled back to the 20-day moving average as well. And from a standard deviation perspective, what we were looking for was about a move of about 694 from the close of last Friday for the index, and -1 standard deviation comes around 38,053. Let me check whether we actually what was the low, 38,095. So I believe we actually reached that level. So again, and the price action for today is between those expected levels that we have been watching for, and some of these indices have done the kind of the moves which took few trading days in just one day, and it could be just one hit wonder as well, and we might begin to see some buyers step in, because we do have on longer term weekly charts some higher levels and then of course our key date of 27th of February. Last but not least, Russell 2000. There we go. So the Russell 2000, it was so encouraging to see the Russell finally break out above the 38.2% retracement, break this this pattern formation. So I'm gonna remove this pattern formation because it's not valid anymore. There we go. So also remove this, which is actually really good. Here we go. Here we go. Here we go. And what it has done is, in fact, it's done another ABCD to the upside. So here we go. There we go, right? Pretty much to the tick. And we missed the actual high by about 16 points. And let's see if we have got some retracement around here. And I believe it retraced to about 78.6%. Oops. I think I drew the wrong one. Okay. Oops, I keep on drawing the wrong one. Why is that? Okay. Excuse me guys, it's taking a little bit longer, but I need to get this thing done. Okay, yeah, that's why. Is this one? Here we go. Yeah, right to the 61.8% retracement. This is, excuse me, 78.6% retracement, and we have seen a pretty strong move out of it. Now this is a pattern of its own. Here we go, because this was an ABCD right to this 78.6% retracement, and the price found a lot of resistance here. But we are also forming this pattern here like this of higher highs and higher lows. If we were to just take this channel formation, maybe it's some sort of a wedge formation, but I'll just yeah, we can say it's a channel formation, and it reached also the top of the channel, and now really at the back bottom of the channel. So a pretty big move, but it could again be just a one hit wonder as well, and the market begins to recover from the next day. So we'll have to wait and see. So this is what we are watching in the key US markets. So we covered the bond market, we covered the US dollar, we covered gold, we covered the crude oil, and also we went deeper into the US stock market indices analysis. So thank you very much for watching the video, and if you like how we do the technical analysis here using pattern recognition, our price pattern one-to-one price projection ABCD that we like to call ABCD, then please think about subscribing to the channel. And if you did like the video, then please do hit the like button, and if you do subscribe, then please also hit that bell icon button. That way you will know when the new videos are posted. So thank you very much for watching the video, and I will keep you guys posted. Thank you very much. Good luck and good trading, and speak to you guys soon.